somebody who's not qualified quite yet, he stays with them on a weekly basis, comes back every week, gives us an update on all the clients that we have with his company, and he does everything to get them moving forward. And he's available nights and weekends.
I am. I definitely
So,
am. That's a must.
yes.
That's a must.
So I am not going to be staying for this whole thing. I actually have to go do some showings. But Aaron is fabulous. He's got a lot of great content today, and thank you for coming.
Awesome. Thanks for having me. Good luck. Yeah, so I think Sarah gave some of this paperwork out that I'm going to go over, and then all you guys here have it as well. But basically what I want to kind of do is just like introduce myself, my team, go over a little bit of our processes, and then kind of give some basics about the mortgage world that maybe everybody doesn't know. We got some things on some programs that we do here, as well as some cost sheets for different loans, and I can kind of explain some key things to look at, and also some things that you might want to advise your clients that another lender might be like saying, hey, here's this really awesome interest rate, but then maybe there's like some hidden stuff in there that it's really not the greatest interest rate in the world kind of thing. They're charging them all these fees and stuff. So I'll kind of run down through that. If anyone has questions, obviously here it's easier. I guess if anyone has questions online, they can say something on there and can relay it. Okay. So just let me know. And otherwise, I can always chat with anybody afterwards as well. So briefly, as Brandy said, my name is Aaron Maddie. I'm a branch manager with Primary Residential Mortgage. Been at Primary Residential Mortgage for 4 years. I've been doing this for probably about 9 years. I actually think the other day, I think it's coming up on a decade. So we'll see. I think that's, I feel like I've been saying I've been doing this for 7 years for the last 3 years. So maybe it's getting close to 10 now. But I know it's definitely 9, so probably coming up on 10. We are licensed in pretty much everywhere in this area. Our main areas are DC, Maryland, Virginia, West Virginia, and Pennsylvania. My company, however, can do every single state besides New York. New York is, I don't know why. Apparently, New York has a lot of regulations that you don't want to deal with as a mortgage company. So I actually literally got a lead for New York yesterday, and we had to refer it out. So I do have a good friend that works there, but every other state we can help you out. I mean, myself in these states, but all the other ones, we could at least refer you to someone that we trust and know. My team is myself. I have 2 assistants, an operations manager that handles everything on the back end, and then currently 3 other loan officers as well. So we kind of all work as a system. If I can't do something, then one of my assistants or one of the other loan officers will step up. All my assistants are licensed loan officers as well. They actually, so they know exactly what they're doing. They can quote you interest rates. They just don't have all the interest in the world in going, like this scares my assistants to death. They don't want to do this. Hi, nice to meet you. They don't want to do things like this. They don't want to go out and talk to people at all. So they just like to manage things on the back end. I often say they're better than me anyways. They just like to be in their little role. So it kind of works out perfect. But we really work as a team to make sure that, as Brandy was talking about, our communication is going to be the most important thing. We always want to let you guys know what's going on and do things in a timely fashion. I'm sure you guys are seeing in this market about, you know, hey, I got a client, they want to make an offer, and we have to be able to do it quick and in an efficient manner, and in the best thing. And that's kind of some things we'll go over here as well that we can do. Our company has complete in-house processing and underwriting. Everything is done in Towson, Maryland. So if you ever go to that office, it's huge. I know for the people that aren't here, but it's bigger than this entire first level of this building. It houses on a daily basis over 40 some processors and over 15 underwriters, all right there. It is really nice because anytime I have a question, I can literally walk down the hall and to an underwriter and generally just say, can you figure this out for me? Or, hey, what can we do to make this happen? And they're all very nice and willing to do that. So kind of a huge advantage of working with one of us in a local setting. Some things we're trying to do to stand out in this crazy market right now is we are telling everyone we can close pretty much any loan in 18 days or less right now. We've had 6 in the past month that have closed in less than 15 days. And it's something that we're doing on the offer to say, hey, we're going to close in this amount of time frame to give our clients the advantage, to try and basically say, you know, here, hey, seller, we're going to get you your money quicker than XYZ other lenders going to kind of do. So that's a big thing we're doing right now, and that is with appraisals. I'll be honest, the only place that we're having issues with appraisal right now is Pennsylvania. I don't think there's a lot of people in this room or stuff that do Pennsylvania, but we're still kind of struggling with those appraisals. But everywhere else, 18 days or less, not even a problem, kind of using it as a leg up. Something we're also trying to do with that is we can actually get your clients approved by our underwriting department up front. So we're doing a pre-approval. I can send them directly to underwriting. Generally, that process from pre-approval to get them through underwriting is probably going to be 3 to 5 days. But at that point, we will tell the listing agent, hey, this person has been through underwriting. And we will generally, if we've had enough time, we will have worked through the conditions that we can say, the only thing I need is title, a good appraisal if we need one, and insurance. And that's it. And we say that's the closest thing you're going to get in an offer to cash. So, there's nothing that's going to beat that, because while I'm sure you guys have all been on listing agent side where you get a deal, you say they're pre-approved and you find out 3 weeks later they're not pre-approved. What happened? What's going on? I mean, we literally just had one the other day that so-and-so from a local lender said, hey, this client is about to get this offer accepted, but the listing agent doesn't want to use this online bank. So will you just go ahead and get them pre-approved and they'll take the offer? And in my head, I'm like, great, the easiest loan I've ever done. Literally get the person's qualifications. They don't have a social security number. They're not a U.S. citizen. They're not a permanent resident alien. And we actually do have loan programs for that, specifically for like people with ITINs, but you have to put down 25%. And they didn't have 25%. So this local bank just took their application, said they're approved, and just rolled with it. So kind of, some things, hopefully you're not running into a lot of that, but the upfront Oh, go ahead. Bankruptcy, the general rule is 2 years from discharge date. So 2 years from discharge date, as long as it was Chapter 7. Chapter 13, if they're in the middle of the bankruptcy, we can actually work with them. 13, yep, Chapter 13, provided that we have to get an approval letter from the trustee that they're working with that they're eligible to purchase. We've actually found a lot of people when we deal with that have bankruptcy have like really good credit scores because they've kind of been through that moment in their life and they're like, well, I'm not going to do this again. So then they're taking care of their credit and sometimes they're really good borrowers.
So Chapter 7 is the good one.
Chapter 7 would be preferred. Chapter 7 is easier than Chapter 13, yes. But we can work with both of them. And that's just a part of our pre-approval process is figuring that out. I guess something directly along with that, with in-house underwriting, we had a woman the other day that had a foreclosure, 2 bankruptcies, a Chapter 7 and a Chapter 13 within the last, I'll say 5 to 6 years. And I remember telling the girl on my team, I was like, we have to send this to underwriting because even though it looks like it fits all the boxes, like this could be a problem. And we were able to get that seal of approval from underwriting up front. So we could really, with that confidence, say, hey, this is going to work out. Now, we're not going to tell the seller, hey, this person's been through 2 bankruptcies and a foreclosure. But hey, for all they know, this has been through underwriting and they're good to go. So definitely some stuff that we can do there with that.
What if, back to the ITN situation?
Yeah.
What if it's a couple, one of them are citizens of
Mhm.
the US and the other isn't? Like, would that still mean you would need a 25% down?
You would still, if we're using the person without a socials and with only an ITIN's income, they will fall under an ITIN loan. Yes. So they would directly go under that program. I have had that situation and we've tried to get the other person approved just with the regular loan. Actually, that situation I was just talking about, we're doing that right now where the guy, he is a permanent resident alien. So he's doing a regular loan. They're not approved for as much together, but at least they can go out and find a home. So yeah, we can definitely work with that. Yeah, go ahead.
For that program, the only option is 25% down.
We have one that's 20. It is a much worse interest rate. I'm not going to lie. But the 20 is the lowest, and then 25% is the standard.
25% down.
Yes.
So what about the first home buyer program?
You can't do it with that program. So yeah.
You have an idea of the interest rate that they're getting?
Right now, I would say today the interest rate on that is probably 5.5 to 6%. Yeah. I mean, in general, at the 20 to 25, well, the 20% is going to be closer to 6.5. Yeah. I mean, in all honesty, for what you guys are probably seeing out there with rates right now, I'm going to say pretty close to the standards 5% for what you're probably seeing out there. Maybe if you've taken an offer in the last month, it's below that. But if you're seeing anything new in the last week or two, I'm going to guarantee it's going to be closer to 5%. There's probably a couple people that are lower than 5%, charging some fees. But yeah, go ahead.
So I know you said you're closing like regular loans for about 18 days. How
Yep.
about the I-10 loan?
That would be closer to probably 30 days, just because everything we do is in-house besides stuff like that. And then there's one other thing I'll go over on here, but that gets brokered out to someone else. So what happens is we have to approve it and then send it to them to approve it as well. So that process, we generally tell, hey, give us 10 days. It might not take 10 days, but I'd rather tell you 30. And it's amazing, if I tell you 30 and we close in 25, everyone's really happy. If I tell you 25 and we close in 27, everyone wants to rip my head off. So I prefer to go with the 30, close early, and look like the hero. But, we'll do everything if we do the upfront underwriting on those, which we can do as well, then that could cut down it as well. All those things. And that's the kind of thing, if we know we have a client that's in a competitive situation, a competitive area, we'll always do that upfront underwriting to try and cut down on those times. We're going to do everything we can to give that buyer the best chance to buy the house. So yeah, so that's a pretty, that's becoming a really popular program a lot. As far as, I'll touch on a little bit what Brandy was saying about leads and our follow-up. Basically, anytime a lead comes in, my rule is that once they do an application, we will have them pre-approved within 24 hours, whether that's a Friday, it means that on a Saturday, if it's on a Saturday to a Sunday. Between myself and my team, we all work, I don't want to say we all work 24/7. I probably work the most of them. I can't force some of my people to work the way I work, but we're going to be available. Like I said, the last thing we want to do is, for whatever reason, be like, well, I mean, I've seen it. When I went to buy a house years ago, I built my house, and my team, that's one of the things we don't do is construction to perm. I had to go through a builder, and I remember knowing exactly what I was doing, giving him everything that they wanted. And I was like, hey, where's my pre-approval? And they're like, we'll probably have it to you in a week. And I was like, a week? Like, what are we doing? And he was like, I don't even understand what the rush is. I was like, what do you mean I'm trying to buy a house? So like, I just think that's crazy. Like, so we're very big on the 24-hour turn times. And then as Brandy touched on, we will continuously follow up with your clients as well. So if you even give us a lead and we're like, hey, do our online application, and they don't do it. Like, I actually have an alert in my phone right now for 4 o'clock today. It's probably 7 people long of people that we have sent our application link and have not done it. And I will follow up with them. I'm not going to be overly annoying with it, but I'm going to say, hey, like, what's going on? How can I help? And then that person, one day I might reset it for 2 days later. Now, if they just tell me like, hey, give me like a week, okay, I'll give you a week. But if you're just not going to respond to me, you showed some interest, so I want to know what's going on. You're not going to hurt my feelings. Just tell me what's going on. So that's our big thing. And the same thing with your people that get pre-approved through us. We reach out to pre-approvals once a week, generally on Fridays, just to say, hey, if you need anything this weekend that's going on, let us know if you want us to run numbers. And then we relay that information directly back to you on anything that they say, so that you guys are kept in the loop. So that's part of my team's goal, is to just break it up between all of us to do those jobs for each other and ultimately make your guys' jobs easier on us. I mean, we have a lot of realtors that will often say to us, look, you're better at the follow-up than we are with our own clients. So we try to, like Brandy, I think I've called twice. And she knows this, so I don't think she'll get mad. But I've literally been like, hey, so-and-so is doing this. And she'll be like, who are you talking about? And I'll be like, this person. Remember we talked to him about like a week ago or something like that. So, we make sure to be that resource for you guys. Almost like your own like little CRM we joke about. So yeah, I mean, on the approval, we'll always tell you what they're approved for, but more so we focus on how much do they want their monthly payment to be? What's their cash situation? Do they need down payment system programs, those kind of things? Because I say this on every single person I talk to on the phone, to the point that my wife like repeats it back to me, where I'm like, I always literally say, you might be approved for $1 million, but not everybody wants to do that. And she like literally makes fun of me as I start talking to a client. But we really do focus on, okay, you're approved for X, what do you want your payment to be? Because that's a completely different thing. I don't want to tell you you're approved for $500K. You guys take a client out for $500K. We tell them the numbers and they're like, I'll never pay that. And then we just wasted everybody's time. So, hey, maybe you're approved for $500K, but you want to look in a price point that's $300K. So that's part of our big thing up front. that's as much as I'm going to go over myself and my team. Obviously, feel free to ask any more questions. At this point, I'm going to try and focus more on the stuff that's in here, which is going to be some loan types and special programs that we have. And then at the end, I'll show you guys like some cost estimates and some rate sheets on stuff that generally you might see from myself and other lenders. But the 4 basic loan programs are always going to be FHA, VA, conventional, and USDA. USDA and VA, I always say, are the most self-explanatory. VA is only for veterans. That's not on here yet, by the way. I'm going to get to that in a second. So I saw some of you looking. I just want to make sure. VA is just for veterans. USDA is only going to be in your rural areas. Now, there is a decent part of Frederick that has a lot of USDA qualifications areas, which is no money down. Really awesome loan. I will tell you, is extremely hard to qualify for. To put it in perspective, a USDA max debt to income ratio is generally 41%, whereas conventional is 50, FHA is 55. Technically with VA, there is no max debt to income ratio, but that just shows you, I mean, we'll approve someone for, say, conventional 300 and their USDA approval is probably 220. So it's just completely different level of approval. It's a really nice loan, but I'll be honest, we probably do 4 a year, just because it's tough. You got to find a house that fits it. You got to meet, there's very strict income limits. But if you have someone that brings that up, just send them my way, and that's part of our pre-approval. We'll figure out if they fit.
Is it because it's this area? Because I have one of those phones.
Oh, do you?
But like I said, West Virginia is like.
I mean,
from the city, so.
that's awesome. I mean, it's just, in general, the restrictions on USDA loans are much tougher than other loans because they do the income limit. They also do it as household, whereas like there's a conventional loan program where there's an income limit, but it could be you and someone else on the loan, and I don't even have to use the other person's income if you qualify. Yeah. So, I mean, then that's a really nice factor. Yeah, 0% down. It's honestly amazing. And then there's only certain houses that qualify. That's the only thing that makes it tricky too. Every house can be conventional. Not every house can be FHA, but for the most part, besides condos. And same thing with VA, where USDA, we literally have to type it in on a map. Is this USDA? Right. So, yeah.
You do have those resources to find.
Yeah. And it's a simple website. I'll be honest, I could give it to you. If you really wanted to do it, it takes me 1 minute to figure it out though. So you probably don't want to even bother, why put it on your plate? It's literally click a website, type in the website, and it pops up and says, yes, this is certified USDA. And same thing, it'll show us the income limits as well there. So we'll make sure that fit within the income limits. So yeah, that's an awesome loan program, but it's tough to qualify for. So.
You can't make too much. If you make too much, or you make too little, you don't qualify for a loan.
Yeah, exactly. And then if you have too much money, sometimes they'll do that too. I mean, I haven't really run into that a lot, but if you have over 20% of the down payment for the house, they'll be like, why are you doing this? So it's a good one, but yeah, all part of the approval process. But that's awesome. I wish I had a USDA loan. I wish, but where I live, they don't. It's not a qualificationable area. So the other two ones are going to be FHA and conventional. FHA minimum down payment is 3.5%. Conventional low is 3%. Depending on income, might be 5%. But if you are a first-time home buyer, regardless of anything, 3% for conventional. So that big rumor of, hey, you have to put down 20% to purchase a loan, or especially conventional, I think that's a big thing that a lot of people believe. Totally not true. I mean, I would say 1 out of every 15 clients I have puts down 20% on a home. So, that's the short and sweet of those. I'll kind of go over a little bit more on those with the rate sheets in a second when I get to those. This will be more of, I guess, now is where I'll kind of start with the paperwork that I got here at least. The first one you guys will look at is your rate is safe with us thing. So we currently have a program, and it's been kind of popular with this crazy market. I mean, to put in perspective, I want to say rates have gone up 1.5% in the last month. Like, I think we closed a loan the other day, and the person's interest rate was actually, I closed the loan yesterday, and the person's interest rate was 3.875, and I was just like, God, that is not even close to what we are at right now. So we do have the option. We actually just kind of released this where we can lock your interest rate for 90 days. Now, the only way we're going to do that is if they're seriously looking at houses. If they're like, well, I'm going to buy in the fall. Well, no, we're not going to do that, because if this falls through, it does hurt us, to be honest. Every time we lock a rate and it doesn't go through, it is money that we lose out of the company's pocket. Not mine, so I can't say I care that much. But if I do too many of those, it actually does worsen our pricing if we continuously don't follow through with locks. Now, luckily, myself and Primary has over a 95% pull-through rate on things that do get locked. But regardless, if you have someone and you know they're aggressively shopping, we will lock the rate for 90 days. At the same time, if rates lower within that time frame, we will float, it's called a float down of their interest rate for free. So, it's kind of a no-risk thing, where if your client is really serious, hey, well, let me lock in your rate today. I will also say we do have a talk with the client of like, we know clients shop at this. We're kind of hoping you're making a commitment to us here at this point. Because again, if they go somewhere else, break the lock, it's a problem. And I've only ever had one client that had a problem with that. They told me they didn't have a problem with it. And then the second they went under contract, well, I got this quote from these people. Okay, I think we were doing this. But luckily, because I run my own branch, which is basically like running our own profit and loss, we can pretty much match any interest rate across the board. We'll just assess the risk. In the 4 years I've been here, we have lost, 4 to 5 deals to interest rate. Like sometimes something comes along that I'm like, I don't know where that's coming from. And no joke, one did close, and the guy called me after closing, and the person changed it a week before closing. And now he bought another house, and he bought it with us because he was like, I'm not dealing with that kind of stuff again. So that's one thing I wanted to highlight. We have the lock and shop for 90 days. The next one that I'll kind of go over here is our bank statement loan program. So this is kind of like the ITIN, where it's through a separate broker that we have, and it's for self-employed people, and they will just go off of your bank statements to approve you for a loan. So this is becoming increasingly popular. I'm sure you guys as realtors, you get the lucky advantages of writing off all these stuff every year that we don't get, that I really wish that we did. But we get a lot of self-employed people. Aaron, I make $100,000. They'll fill out our online application. Aaron, I make $100,000. We'll get their tax returns. They wrote it down to $20,000. Well, to us, your income is $20,000. So you can imagine if your income's $20,000, you're probably not going to be able to approve for much of a house. So what these bank statement programs do is we will give them 12 to 24 months of personal or business bank statements, and they will mainly focus on the deposits made into your bank account. And they will go ahead and use that as income. I had a guy about a year ago that was a landscaper, wrote his income down to $35,000. But when they did the bank statement program, they came back and said that their income was $15,000 a month. So we went with that. Guy bought a $600,000 house, moved on. It was really awesome. I mean, it's a really good program. And I would say probably 30 days looking at closings for those, because again, it goes through this special broker. But they do kind of an underwrite up front, where they actually do the pre-qualification. We get the bank statements, we give it to them so that it's verified up front by them. Hey, this is the right calculation. I'll be honest, I don't know how they calculate it. I have no idea. But they always come back with numbers that I'm like, wow, that's a lot more than if the client was just going the old-fashioned way of using their tax returns. So, yep.
Is interest rate higher that way? Or?
Slightly higher. They have really, really focused on becoming competitive in that space. I'm going to say it's 0.5% higher than what the general interest rate is. If 2 years ago, I would have said 2% higher. They've really, really lowered it. I think because some other competitors have kind of came into their space. The broker's name is Angel Oak. And there's a couple others now, like Sprout Mortgage is a big one, that are kind of trying to get involved with it. So I think they're tightening and trying to stay competitive with everything, which is just good for us and everybody else involved.
Obviously, I guess by them looking at the bank statements, they want to make sure that they have the funds.
Yes. So, I mean, it's really nice because generally those people are very well approved in that they do have funds. They do make a lot of money. They have good credit scores. I will say the program goes all the way down to 640 credit score though. And at the same point, they just write off all their taxes, which I wish I could do. I wish I could write off all my income and pay less taxes, but I'm a W-2 employee. So that went away a couple years ago. I was very sad about that. But so that's a very popular program. And Angel Oak in general has a lot of special things. I don't have them all listed on here, but they actually have a no income loan. That interest rate is really high, I will tell you. But they will basically, if they can justify that you will make, it's a lot of times for investors, that you will make money on that property as opposed to what your mortgage payment is, they'll do the loan. No problem. 720 credit score, but they will do the loan as long as you can verify that you're going to make enough money on the rent, which is usually done through an appraisal. I've only done one of those. It was very easy. It was extremely easy. But that's another special one that seems to be getting a little popular with investors. So, so that's some big things with them. The next one I have is one that we do a lot of. I'll be honest, we probably do 5 of these a month. The one that's labeled no down payment, no problem. That's our Chenoa loan. So this is an FHA loan that covers your entire FHA down payment. It covers the 3.5%. It can go as low as 600 credit score. There is no income limit. It literally sounds too good to be true, and I think it is for the most part. It still boggles my mind a lot about it. But yeah, that's the short and sweet of it. And that's all done in-house. So we could probably close out in 18 days as well, like not worrying about doing anything special with that. Rate is a little high. Probably today, I think if we were looking at the interest rate, we actually quoted one this morning. It was probably 5.5%. But I mean, all you're left with is your closing costs. So I know seller help's almost impossible to get in this market. But if by chance you were able to get seller help, they could literally show up to closing with nothing. So, and we do have that happen from time to time. But you're basically taking your average closing cost is probably 3.5%, 4%. So you're basically taking someone's down payment plus closing costs and cutting it in half and saying you only need half as much money as you needed before. So it's extremely popular. And again, we probably do 5 to 6 of these a month because we're seeing a lot of just because people can't get seller help. They might have $15,000 in the bank, but they need 20 grand to close. And they're like, Aaron, I don't have 20 grand. Well, let's do Chenoa, cut in half, and then you got enough money. So then you don't have to ask for seller help to kind of help with your offer. So that's an extremely popular one. And for sure, ask me any questions on that one as well. It says here up to 5% in down payment assistance. They do have a 3.5% and a 5% option. The 5% option, though, you do have to pay back. The 3.5% option, you do not, as long as you make mortgage payments on time for 3 years. Yep. So the 5% one is paid back at a 6% interest rate. So that's the only difference on that one. We don't do the 5% one because of the payback, it often raises their payment too much that they don't want to do it. So they just take the 3.5%. We only do the 5% one with people that generally really, really need all the cash covered. Okay, and then one more here before we get to the cost sheets would just be Maryland Mortgage Program. So this doesn't really break down the program, but I just kind of wanted to show you guys a little bit of a rate sheet. I don't know how many of you are familiar with Maryland Mortgage Program. We are the 2nd largest lender in the state for Maryland Mortgage Program. So they actually just announced yesterday we're whatever the highest level of service it is for them, which is really nice because we do kind of get preferential treatment with them sometimes. They have a lot of programs, as you see on here. To keep it simple, kind of going down from the left-hand side, the one with the really nice interest rate, we'll call it nice interest rate of 5%, would never bother to do. They give you no money. They're just like, hey, we'll give you this really nice interest rate, but no money. So we generally don't want to deal with that because they can be a little bit of a pain to deal with. The first time advantage 5,000 is $5,000 that they'll give you. The first time advantage 3%. So they give you 3%. Just for on the left-hand side where it says FNMA conventional, FHLMC conventional, that's Fannie Mae and Freddie Mac conventional. I would say leave that stuff to us, but basically that's conventional loan. Government loan is going to be your FHA, VA, USDA. All follow. You can do all those loan types within Maryland Mortgage Program. So not a problem at all. I'm going to skip the Smart Buy for a second and come back. The flex side is for non-first-time home buyers. Now, you cannot own a home and do Maryland Mortgage Program. However, if you bought a home within the last 3 years or you own a home and you're selling it at settlement, you could do Maryland Mortgage Program and do the flex program. So not very popular, but we do that.
So you could, so basically you're saying you sell the home you have,
Mhm.
and then you can use this program.
Correct. So technically you could do it on the same day. You could settle on your home, be buying your home at the end of the day, but you have to sell the home first. And then you can do the Maryland Mortgage Program option under this flex, which you can see interest rates just a little bit higher. All of the flex and the first time advantage options are true loans that do have to be paid back, whether you refi, sell your home, or once you pay off the entire term, then they'll start asking for that money back. So the grant option, though, you can see the flex 3% and 4% grant, higher pricing. But we've done this before for people that just need the money. Hey, here's the money. And then you can refi in 6 months. Now, in this market, I don't know if I'd recommend that because rates just keep seeming to go up. And the Fed did announce a couple weeks ago that they plan to keep raising them. So whether that's going to be true or not. So you might be like, well, I'm going to do this grant, do this higher interest rate, and I'll refi in 6 months, and 6 months might show up and rates might be higher. So it is a little bit of a risk, but in the previous stuff, I would have said not that much of a risk as well. The last one I'll talk about, I don't know if you guys have heard about this. We're pretty proud in this. I think is Smart Buy 3.0. So this will pay off your student loans and help you purchase a home. It's up to $30,000 now. It used to be 40 grand. The biggest trick with it, to be honest, is that all your student loans have to be gone at the time of closing. So that can make it tough. You got $50,000 in student loans. Hey, we'll pay off 30. Well, you have to pay off the other 20. So that can make it really tough. But these are a lot of fun. We probably do, I would say, 5 to 6 a year, at least my team. We show up to closing. We have a really big check, like we're paying off your student loans, which is always a good time. I think our company in general has paid off over $250 million in student loans through this program. So pretty amazing to think about. There are a lot of people that clearly do use it. It is 5% down conventional. And you can also get $5,000 in grants with that. So really cool program. Get rid of student loans, buy a house. So my wife has a $35,000 in student loans, and she's not on our current mortgage, and I'm slightly considering doing it for her so that she can just get rid of those damn student loans. So we'll see. Technically not supposed to do it, but we'll see, because it's supposed to be for primary residences only. So they don't know where she lives, though, so we'll see. The last part is I really just got a couple of different cost sheets. I did the different loan programs, and I kind of just want to, the first one, I'll just go over it with you. The first one I have up for the people in the video is just the conventional one. I'm going to go over it, and then the other ones are exactly the same, but I'm just going to point out things that are different for the loan types and also some things that you kind of might want to just look into. Anytime you guys are, whether it's working with us or somebody else, we will, if your client's making an offer, we're always going to provide this so that everyone can see everything on paper. To be honest, we also don't want people to get under contract and say, well, you didn't tell me that. And I'll be like, I did. We sent you this paper right here. But we usually go over it with them as well because we want everybody to know what's going on. So, to keep it simple, in the proposed loan information, we're going to do all these examples at a purchase price of $350,000. The base loan amount is after the down payment. In this case, we did 5% conventional. Interest rate at 4.99%. And then we'll kind of break into the fees. The fees going from the left-hand side, always at the beginning, everything from application down to re-inspection is fees from my company / you can see like the appraisal fee, and the re-inspection fee that we always put on here is simply only if you go out for an appraisal and the appraiser has to go back out, whether there's a deficiency in the home or a repair needs to be done, and they go back out. So if you don't have to go back out, you're going to get those $200 back, and we'll explain that to them. But we like to over disclose to make things look better than hopefully that they end up being. The next section from search and abstract all the way down to city, county tax stamps, that's going to be title fees. So these are all things that we pull title quotes, and this was the average fees that we were getting for a $350,000 home. Obviously, your client gets to shop for title insurance, / I'm sure you guys all have people that you recommend for title insurance. So those fees are subject to change, but I do find that most title companies are very similar. The transfer taxes, recording fees, and city, county stamps, that's from the government, so you're never going to see anything really vary on those things there. Jumping over to the right side, the prepaid reserves, that's where you're going to get, so generally they collect 12 months of insurance, 6 months of taxes and prepaids, and then they hold an additional 2 months in insurance and additional 2 months in taxes in reserve. That's pretty standard across the board, where almost every single purchase, that's going to be the numbers. And days of interest just is simply from the day that you close to the end of the month. So if you close at the end of the month, that days of interest will be less. Every estimate that we do, we usually put 15 days, just keeping it right in the middle. But the payment summary, I mean, kind of self-explanatory, but just to give you the basics, you got your principal and interest. Hazard insurance is homeowners insurance. Our estimates call it hazard insurance. Sometimes it confuses people. Real estate taxes is going to be your property taxes. Mortgage insurance, that's something you might want to look at comparing these two. On conventional, it's $85.90. Generally, you will find for people with conventional loans, your mortgage insurance is better than such as an FHA loan, which we'll look at next. And that's it. I mean, that's basically the cost estimate in summary. Does anyone have any questions about any of that stuff? Or I don't know how much you guys have seen or what. Did you have a question?
I do. Just
Yep.
because I'm a friend.
Yeah.
What on here is negotiable?
What on here is negotiable? Well, I don't know, not much, to be honest.
Nothing?
So our fees are set in that our only true fees, like our fees, are the application, processing, and underwriting. We have to give the same thing to every single person. It's like a RESPA violation if technically I'm giving you this and you this. Someone will come back, someone will audit us one day and say, why did you give this person this person? And then it gets real sticky. Then they'll start looking at things and they'll go, well, did you do it because it's a male and it's a female? What did you do it because of this kind of thing? Now, we can give lender credits to offset things in super competitive situations. We will give lender credits where basically I can't change these numbers, but maybe there's a lender credit put in here at the bottom of 5. You know, you might say, well, hey, Rocket Mortgage is giving us, their fees are only $900. Well, if it's really between us and Rocket Mortgage, sure, we'll give you $500. Hopefully it's never between us and Rocket Mortgage and we have to make that decision. But if we did, truthfully, at the end of the day, I would trust that you guys could talk about it. But if not, we would give them the credit for $500. So everything else, to be honest, title fees is going to be who you choose as a title company. And then the collection of insurance and taxes, we don't have any control over that. The only thing I can ever do with taxes, if a property is a flip, I've had people in really tight money situations, we can use the old taxes instead of the new taxes that they're going to be. But we make them sign a waiver that you're aware that your taxes are going to go up, and probably in 6 months, you're going to have to write a check for those taxes. But other than that, I mean, the rate, I guess, is negotiable. Like if you came to us, of course, if you came to us and you were like, so-and-so is giving us 4.5%, we would do everything in our power to match that interest rate. And like I said, we generally do. I think we've lost 5 deals in 4 years. So we pretty much can always match it. Now, if every single client we're dealing with wants us to match our interest rate, it might be like, what's going on here? I mean, but that doesn't happen. So when we run our rates through our system, it goes through 22 different banks. So generally, you're getting the best price out of 22 different banks right up front. So that's not a huge problem with us, a lot. At least that I'm finding. So the only thing that I don't have on here, to just be weary for any of you guys that are getting estimates from other companies, or even to be us, to be honest, because sometimes we will do this at the request of the client. We will only do it at the request of the client. Is that you will get, generally when you see a super low interest rate, there's going to be something on here called discount points or origination fee. And those are not required. No matter what the other lender tells you, we have to charge that. I mean, my brother just bought a house in Texas and was talking to this lender, They were charging him discount point and origination fees. And the guy told him he couldn't get them waived unless he went to the president of his company. He said, I can't talk to the president of my company. He's like, he's going to get mad at me. I told my brother, I said, go get another estimate from my buddy here who's licensed in Texas and watch how fast they're willing to waive it. Gets another estimate, 15 minutes. I guess he got a hold of the president in 15 minutes, waived the fees. So those fees, to be honest, unless you're getting a low interest rate, which sometimes you will buy down your interest rate, which is common, they go directly into the lender's pocket. So there is literally nothing there. Now, not my pocket, but the company's pocket. And they will sometimes try and say, hey, add in half a point in fees. Half a point in fee is 0.5%. So on this would be $17.50. So your client might be, it's very popular for credit unions. You can literally see it on their website. We'll be like, hey, here's our interest rate. And then in real small writing, oh, this is subject to 2 points. So it's like, we can basically break down with the client the math. Hey, is it really worth it to pay $7,000 for their rate here and our rate here, and the difference in payment is $20 a month? So then we'll just say, take that $7,000 divided by 20. How long do you have to live there for that to make sense? Oh, your entire term of your mortgage? Okay. Well, now, do you just want to brag to your friends that your interest rate is this number? Because otherwise, I don't know what you're doing. And believe me, we do get some people that are like, I just want to tell my friends what my interest rate is. I'm like, okay, well, I'll charge you the points too then. Let's go. So, that I guess would say would be the only things that are really negotiable. To be honest, most of it's just pretty set. So, flipping it over. So same exact thing. I just want to show you guys a little bit difference in loan programs. So the next one would be highlighted is the FHA one. One thing I can point out in the upper left-hand corner, you can see the rate is still 4.99, but what this thing called the APR, which is 6.069, whereas opposed to on the other one, 5.27. No one ever quotes APR. They only quote interest rate. APR is the sum of all the fees, what your true interest rate is of what you're paying. So the reason why this one is so much higher is going to be because of what I highlighted in the bottom right-hand corner. FHA charges 1.75% as an upfront fee to do FHA. Now it's rolled into your loan, so you don't have to pay it out of pocket, but that's an additional fee just for doing FHA. Now, again, you're not paying it out of your pocket, but as you can see, they're telling you your true interest rate is 0.8% higher for doing FHA and doing conventional. Same exact loan. Because they put that fee in there, you can see the base loan amount at the upper left-hand corner of $337, as opposed to the other one, which is $332. So that's where that extra $5,000 is going. Again, you're not paying it up front, which is nice, but it is in your loan amount. So if we can, we try to get every client that we can conventional because it's just a better deal for them. But in all honesty, while the technical rule is conventional starts at 620, everything has to go through this automated underwriting system, which is a computer. I will tell you the computer generally does not accept a conventional loan until someone gets a 680 credit score. So the only way to really make it run through anyways, if you have someone that has a bad credit score and maybe a ton of money in the bank. Those are the things that the computer likes to see. Either you owned a home and you did a good job on it, or, oh, you got a lot of money in the bank. Okay, well, we can probably trust you with the loan kind of thing. But 680 and below, we're probably going to go FHA. You can also see there on the payment. So FHA has a set mortgage insurance interest rate. That's the only thing that you're going to see there is different. Let me just make sure Taylor did that. Okay, yeah. So FHA mortgage insurance, whether you have, we'll go down to 580 credit score. So whether you have a 580 or an 800 is the exact same rate, 0.85%. Doesn't matter. Whereas conventional, it's very much off your credit score. So when you get a better credit score, you'll get a better terms on the mortgage insurance. So you can see there, the mortgage insurance on this FHA loan is $237, whereas opposed to on the conventional, it was $85. That's a huge difference. And again, we're talking about this is the exact same house, purchase price, interest rate, and the person's monthly payment is almost, actually it is $200 more for going FHA to conventional. So we will try to get people conventional when we can. I don't want to knock FHA in any way, shape, or form, but it is definitely a lesser of a loan program for sure. The only advantage I'll tell you, FHA, to any government loan, you guys can ask for up to 6% seller help, whereas conventional, you can only ask for 3% until the borrower puts down 10% or more. So again, feel free to ask me questions about this stuff because I know half of it's probably really boring. So
For conventional, is there any way to get rid of the PMI without having to put down 20%?
So there's actually two ways to do it. They're smart in that I will say it's not always generally a giant advantage, but there's one option which is called lender paid mortgage insurance where we'll pay it for you, but how we pay it for it is we raise your interest rate. So we raise your interest rate and then we pay it for you. There's a calculation for it. The other way more common way is what's called borrower paid mortgage insurance. So with a click of the button, I can tell you, hey, if you pay this much up front, you won't have mortgage insurance. So on this loan, the borrower paid option might be like $5,000. Hey, we'll add $5,000 to your closing costs. You won't have mortgage insurance.
And how much down payment do they need?
Only 3%. At 3%, you can start doing it. Yep. So now mortgage insurance for conventional is very dependent upon what you put down as well as your credit score. So like sometimes we'll get people that'll put 15% down and they'll be like, I don't want mortgage insurance though. And then I'll run the quote for them. I'll be like, it's $20 a month. And they'll be like, oh, that's not that bad. Like there's a very big stigma that mortgage insurance is this super expensive, crazy fee. There's only 6 mortgage insurance companies in the entire United States. So with a click of the button, we get all their quotes and they have to remain competitive against each other because there's only 6 of them. So I get calls from mortgage insurance every day. Hey, you should use us because we do this, this, and that. I'm like, buddy, I click the button. Whoever's got the cheapest, there's nothing to it. So, they stay extremely competitive. So that's really the biggest way that I would describe that difference there. Yep.
In terms of points, how does that work? Is there a limit of how much you can charge?
There is technically a limit. It used to not be a limit, but now I generally would say the limit's going to be around 2. Once you get to charging a certain amount of money, it creates an alert in our system that there's a percentage on every loan. If you're charging somebody too much overall money within the deal, they kind of flag it as like you're ripping the person off. They're basically like, what are you doing here? So they won't let it go through. And our compliance people will tell us what that tolerance is. We don't deal with it a lot, but sometimes we'll get people, I want my low rate as low as I can. I don't care how many points I have to pay. Okay. It usually stops at 2. But yeah, the points is just usually, credit unions charge points on every single deal that they run, every single deal, because it's just money into their pockets. It's just pure greed, to be honest. But we will only charge it if our client is trying to get to a better interest rate. And we'll just usually give them the pros and cons. If you're going to be in a house longer than 3 years, to be honest, it usually makes sense. So, and we'll have those, that's a part of our pre-approvals. My pre-approval with a client is probably 30-minute phone call. That we really just kind of lay into it of just like, hey, here's everything. I hope when we get done this call, we're just running estimates and that you fully understand kind of what's going on from those estimates. So, I guess we'll go to the next one. Let's see the next one. So the next one's VA for veterans. Love VA loans. So as we know, no money down, no mortgage insurance as well. So a fantastic loan, but obviously only for veterans. You can point out here, the APR on this is only that 5.2 because you don't really have any fees built in. The big thing that I'll put on here at the bottom is funding fee is what this one's called for VA. This is for first time use is 2.33% the first time you use your VA loan. Again, you don't pay that. It goes to the VA, but it gets worked into the loan. Second use is 3.3%. If you are even considered 5% disabled from the VA, this fee is completely waived. So if you have disability from the VA of even 5%, which all veterans that I talk to always say that they're all disabled in some way, because usually they have loss of hearing from the gunshots and stuff. So that whole fee will be waived. So then a VA loan becomes a conventional loan with no money down and no mortgage insurance. So really, really awesome loan type. And then the last one I'll just do here, this is just an example from Maryland Mortgage Program. So you can see they set the rate at 5.5% up there. This we did as an FHA Maryland Mortgage Program and highlighted them getting the down payment assistance. So then you could just simply compare the cash to close on this one is less than all the other ones, maybe besides VA. That's really all that's going to change on those. So that's all I got for today, though. I don't want to keep you guys too much. Like I said, I'm very aware you guys are the fun part and we're the boring part. So
And so a question about the MMP program. So like with the Chinoa program.
Uh-huh.
Usually like 8 fees to actually have that program.
MMP does not have a fee like Chinoa. Yep. Chinoa does have their own fees. I'm saying fees and associating with your name. They do have their own fees. Maryland Mortgage Program has no fees. They actually don't even let us charge anything whatsoever. You can't charge points, can't buy down the rate, none of that stuff on Maryland Mortgage Program. So
When can a client like probably not qualify for MMP?
there is income limits. They are pretty high though, so it is hard to get there often. Their minimum credit score is 640. That's really going to be your biggest one. 640 is going to be the minimum credit score for Maryland Mortgage Program. But that's really it. We've been doing a little bit more of that just because, as you said, the Chinoa fees sometimes have been a little bit of a pain.
Do you have programs that cater to like people in like, the medical field or
We do.
education?
We do. We do Neighbor Next Door, which is for teachers, nurses, police officers are who that is for. So they generally have to buy within their area that they're working, and they'll fall into the Neighborhood Next Door program. They can get up to $15,000 in grants.
I like that.
Yep. So
You
Peer-
can buy within where they work.
yeah, it's like a certain mile radius. So we would figure out where they work, and we would say, hey, you have to buy within this area, and you're eligible for those grants.
And it's called
Neighborhood Next Door.
And that's for teachers and
Medical professional and police officers. There you go. Yep. We do have a doctor loan. I will be honest, it's kind of popular, not with us, but doctor loans in general. You're probably not going to go through us for it. It's 5% down. I think SunTrust offers 0% down. I think they have a complete grip on that entire market. But if you really love us over SunTrust and you want to pitch us on those doctor loans, we'll take them. So our only sell on the doctor loan is we won't count their student loans against them at all. So, and only 5% down up to $3 million. So
let me ask you, in this market, we know we're dealing with a challenging market. Maybe you want to talk about that little tool that.
what do you want to talk about it on the main part of? I mean,
like how that's beneficial to probably your clients, like our clients.
The market?
Concerned about, let's say, bidding over asking price
mhm.
kind of situation. Like, how does that work?
Well, I mean, it is a super competitive market. I mean, I would really just say the only things that now some tricks that we've been doing for over asking, if your client has more than the minimum down payment, if it's going to under appraise, at the end of the day, they only technically have to put down that minimum down payment. So we did do that recently when someone was putting 10% down, their home under appraised by $15,000, and they kind of knew it was. So we just told them, well, hey, why don't you just put 5% down? And now instead of bringing $15,000, I think they had to bring $6,000. And they were okay with that. Now, obviously, that's only for people that aren't putting the minimum down payment down. But we call that our appraisal gap strategy. So just some things that we're trying, like I said, everything we're trying to do from when I said at the beginning is trying to help these clients get into homes. PRMI really prides themselves on having almost any program available. If you've heard of it out there, we probably do it. We have our own renovation department that if you ever get a reno loan, it's really nice because we just send it to them and that's all they do all day long. But almost any program you've probably ever heard of, we're either enrolled in it or can do it or get rolled into it. That's a big thing. They don't want to ever lose a deal because so-and-so just is offering something that we can't do. And like I said, that's why we're really pushing the fast closing times
So
to
you
try and
don't-
serve.
So can I ask like about the neighborhood next door program? Is
Mm.
there like a minimum, like, what's the qualification look like?
So it's actually just a regular conventional loan, and they just fall right into that program. Yeah, they just got to be within that area. The income limit is 125% of the area median income. So I haven't had one yet that has exceeded that. Now, maybe these travel nurses right now. Geez Louise, we did an approval for a travel nurse today. He's making $200,000 a year. About to get into nursing. But yeah, I mean, but outside of that, generally they fall within that area, that the qualifications. So, but yeah, anything else you guys got from that, or just questions in general? Yep.
What is kind of like your debt to income ratio? Because I'm experiencing that now. Like now we had a pre-approval, we were all set to go. The first house we did end up writing on. The second one was less than 300,000. We're excited, and then the HOA was too high.
Mm-hmm.
So the lender gave a number that we would never get, an asking price so low. So what I wanted him to do was to explain to both of us, like, what are the options? Like, how can we get to where we need to be?
Yeah.
And he was not very, he didn't explain it well.
Uh,
So I was frustrated with her, and so what is kind of like the cutoff, like where?
So for FHA is the highest. Well, I guess VA is the highest, but for simple terms, FHA goes all the way up to 56% of your monthly debts, minimum payment, including the mortgage payment, divided by your income, and it's gross income. VA, there technically is no limit. Like, there's ways, like, we've done loans for VA people once, debt to income ratio was 80%. I can't say it was a great idea for them, but if you meet the qualifications within the computer, I would say generally VA, the limit is going to be the same as FHA. But like I said, you can pull some tricks off and make it work. Conventional is 50% with us. I will say that is something that really differs with us and your local banks and your big banks. Almost any time a client tells me they're pre-approved for X and I ask where, if they say Wells Fargo, Bank of America, Credit Union, I know we can get them approved for more. Those places will stop the debt to income ratio on conventional loans generally at 43 to 45%.
And that's exactly what I was trying to get to ask him, because I wanted to shop around. We were off at $160 a month. So,
Yeah.
At that point, I'm like, we could just go to a different lender, but I didn't.
Yeah.
I know that it gets exhausting. So
Yeah.
that's like valuable information to know that maybe it just takes a different lender that has a little bit more leniency.
Yeah, I mean, it's probably my favorite post to make, and we did a lot of them last year where, hey, so-and-so was approved for this, then they came to us and we got them approved for 60 grand more. And it's the easiest thing in the world when they tell me, hey, I'm approved with XYZ and it's a big bank. I'm like, well, I know it's going to be more through us. We just have looser guidelines. At the same point to what you're saying, I will tell you this, we are kind of a little bit of masters at, like, in that situation, we would talk to the client and find a way to try and make it work.
Yeah.
I mean, like I said, it's not ideal, but we're willing to take a little bit of losses on, maybe I'll drop their rate a bunch. Hey, let me give you this rate just to get you into the home. Or maybe, hey, if you pay off this credit card or get it down to this balance, it's going to wipe away that debt, and now you can afford this home.
Mhm.
Go get homeowners insurance, try and find it for $50 instead of the standard $80 or $90. So we kind of pride ourselves on being able to come up with scenarios like that. But I'll say on the pre-approval, we generally put this is their max payment, as long as we might say, hey, you're approved for $300K, assuming it falls within this payment, specifically for your information, for your situation with HOA and condos, because those can vary so much. I mean, you could be here, your condo could be 200, and next door it's 500. And that does piss people off, because they'll be like, wait, you told me I was approved for $300K. Yeah, but $300K with this. So we you know, to be honest, we learned it the hard way, and now we just say, hey, this is the max payment. So to make sure you're within that kind of payment range, which is a part of why having the access that my team has to save you guys the hassle anytime before you go to see a house, even go to see it, send us the numbers and we'll run them for you.
Yeah, because it doesn't really matter what she's approved for, because a condo that has, it was definitely discouraging to her. So we're trying to
Yeah, and
figure
she
out-
probably liked that condo.
And we want to do a wrap, we're still in the process of it right now, they just dropped the price of it, so we're trying to, she's gonna get someone to pay off some debt, so we want to do whatever, like a rapid rescore or
Yep.
something.
And we'll do this.
Now,
Yeah.
how does that work, even if it just happens right now and it still takes whatever, 30 days to hit her credit, I mean, do you guys still, you honor that new, what the credit would be?
Yeah. So what we do, the rapid rescore, I can actually fix someone's credit in 3 to 5 days. And that is their new credit score at that moment,
Okay,
right there.
that's all clear.
Wait, can you elaborate on that a little bit more?
So basically, we have this system built within our credit reporting thing that can tell us if client does this and that, this will be your new credit score. And it's 100% guaranteed. Now, I can't do anything. If you're like, hey, Aaron, make my credit score 750. The system might be like, I don't know how to do that. So it can only do what it can see. Generally, the easiest thing is high revolving credit card debt, paying down the balance. It'll tell you, hey, it's going to increase your score this amount of points. But I can tell them to the dollar, hey, if you take this balance from $400 to $42, you're going to increase your credit score 50 points. Once they do it, they just have to get us a letter from the creditor stating on the letterhead, this is your new balance. We submit it to the creditors, and within 3 to 5 days, we'll have their new credit score. So we do a decent amount of that, and we really do. And it's 100% guaranteed that this is going to be, unless you do something else. Now, if you go open debt or, you know, miss a payment, I did have one of those recently. We did a rapid rescore, and they discovered in the middle of the rescore that they missed a payment. So that did not help. But obviously, if you just keep it true to what it is and you pay down these debts, within 3 to 5 days, we'll have your credit fixed. Yeah, and we do that a lot for if people want to get into a program. Oh, I'm at 630, but to be in Maryland Mortgage Program, I need to be 640. Well, okay, do this, fix that. Now you'll be at 650, and you're good to go. So
So I think, yeah, it's less on her, well, I mean, I guess it's her credit score, but I think it's more of just that payment, that amount. that,
Yeah.
We're like $180 off. And so she's asking, you know, if I can get a family member to pay off this amount of debt, will this qualify me? And
we would just take the letter from them stating this is the new balance, and then we would just say, yeah, this is it. And again, same thing, within 3 days. Now, that case, if she's truly paying something off, the second she shows us it's paid off, if her credit score is good enough already, then we'll just take that letter as proof. So, and then they'll probably do what's called at the end. They'll call the creditor to make sure they didn't run it back up is all. So, but yeah, all kinds of fun things. Anything else you guys are experiencing or questions or things that other lenders are pissing you off about? Just want to, you know, not yet, right? Not until you deal with us. No, just kidding. But okay, well, awesome. I mean, I'll answer any question for you guys. Anybody that's online that wants to, you know, send me questions. Hopefully we can get out like my email address and all that stuff to you guys, or my phone number, and we're pretty much always available. So thanks a
How long
lot.
does it take for someone to fill out like your application? So for instance, if I call my lady, I know she's just overwhelmed at this point.
Yeah.
But if I said, look, let's give it one more shot because like we're not going to give up until it's an absolute no, you know, how long does the application process take for you to get her information to be able to run some numbers and give us?
I would say it's
good
2
answer?
parts, our application. The initial part that asks questions is 10 minutes. Like, and then the second part is just how quick she gets us her docs, which is going to be her W-2s, pay stubs, bank statement. Well, your bank statements on our application, if you want to, you can actually type in your login and password and it'll link them directly. So you don't even have to give us statements. And then like your ID, and that's it. So, I mean, like in a real world, if that lady was to do this application right now and she got us all of her stuff by 4 o'clock, I mean, we'd probably pre-approve her tonight. So, and she'd be on her way. So that's the kind of, you know, that's how quick it is. And some people are like, well, it's the online application tough. The number one example I always give is we had an 80-year-old lady. I don't know why she was buying a house, but she wanted to buy a house. She said she had never bought a house in her life. She was really excited about it. She did not own a cell phone, only a house phone. And she was able to do our online application without calling me once, asking, what do I do? Now, that's not to say everyone. I get a lot of questions. Hey, what am I doing? But if she was able to do it, I think 95% of the people can do it pretty easily. So she powered through. A lot of tears in that one at the end. We like tears, good tears. So, well, again, thanks. Yeah, I mean, I'll keep answering any questions that you guys have, but thanks for having me in here today. And it's nice meeting all you guys. And we are partnering with you guys and Brandy for a lot of the leads that are going to be coming in. So hopefully we'll be working with you guys with a lot of them. So hopefully we'll be seeing each other more. So awesome. Thank you guys very much. Whew. Oh, man. I'm not going to be able to stand up.